three of the most valuable private companies on Earth are all going public in 2026. SpaceX at $1.75 trillion, OpenAI targeting $850 billion, Anthropic filing confidentially with a valuation that could rival both. Combined, these three companies are worth more than most countries' entire GDP. And every retail investor on the planet is trying to figure out the same thing. Are these generational buying opportunities, or the biggest bubble since the dot-com crash? Let's break down all three. 2026 is not a normal year for the stock market. This is the first time in history that three companies this large are all going public in the same 12-month window. SpaceX is already pricing. OpenAI filed its S1 on June 8th. Anthropic filed confidentially. The last time anything even close to this happened was 2012, when Facebook went public at $104 billion, and people thought that was insane. SpaceX alone is 17 times larger than Facebook's IPO, and it is the smallest story of the three. Let's start with SpaceX, because it is the one you can buy this week. Ticker SPCX, pricing. Thursday, June 12th, raising $75 billion. That is the largest IPO in human history. Not the largest tech IPO, the largest IPO, period. So what are you actually buying? Two businesses. Starlink, the satellite internet constellation, which now has over 4 million subscribers and is generating roughly $14 billion in annual recurring revenue. That is real money, and it is growing fast. Then the launch business, Falcon 9 and Starship, which dominates global launch with something like 70% market share. Combined, SpaceX did about $18.2 billion in revenue in 2025. That is a real company with real cash flow. Here's the thing. $18.2 billion in revenue is impressive, but the valuation is $1.75 trillion. That is a price-to-sales ratio of roughly 96. Let me put that in context for you. The highest price-to-sales ratio any major company has ever sustained over a full market cycle is about 30. Tesla hit it briefly. Nvidia touched it. Neither stayed there. SpaceX is asking you to pay 96 times revenue on day one. That is not just expensive. That is historically unprecedented. No company has ever maintained a PS above 30. SpaceX is launching at 3 times that ceiling. So the bet is not that SpaceX is a great company. It probably is. The bet is that it will grow into a valuation that no company in history has ever justified. Now, OpenAI. Everyone knows ChatGPT, over 300 million weekly active users as of early 2026, the company that kicked off the entire AI revolution. OpenAI filed its S1 on June 8th with Goldman Sachs and Morgan Stanley as lead underwriters. They are targeting a valuation between $730 and $850 billion, with a public offering sometime around September 2026. The revenue numbers are real. They did about $3.7 billion in 2023, roughly $12.7 billion projected for 2025, and they are targeting north of $20 billion for 2026. That is genuine hypergrowth. But here is what nobody is talking about. OpenAI is still losing money, a lot of money. They burned over $5 billion in 2024 alone. The compute costs to run these AI models are staggering. Every time you ask ChatGPT a question, OpenAI loses money on the transaction. So let's do the math. $850 billion valuation divided by $12.7 billion in revenue gives you a price to sales of about 67. That is better than SpaceX's 96, but it is still more than double the historical ceiling. And remember, this is a company that is not profitable. They are growing revenue fast, yes, but the losses are growing with it. The more people use ChatGPT, the more money OpenAI loses. That is not a typo. The marginal economics of running large language models at scale are brutal. Now, can they fix this? Maybe. They are building custom chips, signing enterprise deals, raising prices. But right now, today, you are being asked to pay 67 times revenue for a company that loses money on every customer. Make that make sense. And then there's Anthropic. This is the one that is going to surprise people. Anthropic makes Claude, the AI that a lot of developers and enterprises are quietly switching to. They filed confidentially with the SEC, which means we do not get to see their full financials yet. What we do know, their estimated revenue, is somewhere between $4 and $8 billion. They have raised over $15 billion in funding, and their last private round valued them at roughly $60 billion. But here is the part that should make you pause. Anthropic's entire brand is built on AI safety. Their CEO has publicly said that AI systems, including their own, pose serious risks. They published a paper warning about catastrophic AI scenarios, and then they released Claude to the public anyway. I am not saying that is wrong. I am saying that is a company whose own leadership warns about the dangers of the product they are selling, and you are being invited to invest in it at whatever valuation they choose to set. Okay, let's put all three next to each other, because this is where it gets real. SpaceX, 18.2 billion revenue, 1.75 trillion valuation, 96x price to sales. Profitable. OpenAI, 12.7 billion revenue, 850 billion valuation, 67x price to sales, losing 5 billion a year. Anthropic, estimated 4 to 8 billion revenue, valuation unknown but likely north of 100 billion, also losing money, and they will not even show you the books. The historical ceiling for sustained price to sales is 30. All three are above it. 2 of the 3 are losing money, and one of them will not tell you how much. Combined, these 3 companies are asking the market to believe they are worth roughly $3 trillion. That is more than the GDP of France, more than the GDP of the United Kingdom. 3 companies, $3 trillion, and 2 of them are not profitable. Now let me show you something that nobody hyping these IPOs wants you to see. The IPO Graveyard. Facebook IPO'd in 2012 at $104 billion. Within 4 months, the stock had dropped 50%. If you bought day 1, you were underwater for over a year. Uber IPO'd in 2019 at $82 billion. It dropped 40% in the first 6 months. It took 3 years to get back to its IPO price. Rivian IPO'd in 2021 at $150 billion. Within a year, it had lost 80% of its value. 80%. That is not a dip. That is a wipeout. ARM went public in 2023 at $54 billion. Volatile from day 1. Up, down, sideways, with retail getting whipsawed the whole time. This is the pattern. Every single mega IPO in the last decade has punished day 1 retail buyers. Not some. Everyone. And now 3 companies are telling you, yeah, but this time it is different. And honestly, I get it. You see SpaceX and you think rockets. You see OpenAI and you think the future of AI. You see Anthropic and you think I need to be early. That feeling, that is not analysis. That is FOMO. And FOMO is the product. Think about it. SpaceX is raising $75 billion. That is more cash than most countries' annual budgets. They need someone to absorb that. Institutional investors got first pick at better prices in the private rounds. Now they are offering 30% to retail. And that 30% sounds generous until you realize the IPO is oversubscribed 2 to 1, which means half the people who want in will not even get shares. You are not being invited to the party. You are the party. Your capital is the exit liquidity that makes this whole thing work. The system does not need you to get rich. The system needs your money. Okay, before you panic and close your brokerage app, let me be fair. Because there is a bull case for each of these companies, a real one, and if I only showed you the scary numbers, I would be doing the same thing the hype creators do, just in the other direction. So let's go through it. SpaceX bull case. Starlink is a natural monopoly. There are 4 million subscribers today, and the total addressable market is billions. Every ship, every plane, every rural home, every military base. If Starlink captures even a fraction of global connectivity, the revenue multiples start making sense. Plus, Starship, if it works at scale, unlocks a new space economy that literally does not exist yet. SpaceX could be the most important infrastructure company of the century. The 96x PS is only crazy if Starlink stalls. If it does not stall, it could be a bargain in hindsight. OpenAI bull case. They have the biggest brand in AI. ChatGPT is becoming the default interface for how people use computers. If OpenAI becomes the platform layer for AI, the way Google became the platform for search, the enterprise revenue alone could justify the valuation. Margins will improve as compute costs fall and custom chips come online. And they have Sam Altman, who, love him or not, is one of the most relentless operators in tech. Anthropic bull case. Enterprise trust. While OpenAI moves fast and breaks things, Anthropic's safety-first approach is exactly what regulated industries, banks, hospitals, governments want to hear. If AI regulation gets stricter, and it will, Anthropic could be the only AI company that passes the compliance test. That is a massive moat. Sometimes the most boring company wins. SpaceX bear case. 96 times revenue. I keep saying it because it is the whole argument. No company has ever sustained above 30. Elon has SpaceX, Tesla, XAI, X, Neuralink, the Boring Company. Attention is a finite resource, and he is spreading it across 6 companies. Plus, Starship has had multiple failed tests. If Starship does not work, the growth story shrinks dramatically. OpenAI bear case. $5 billion in losses per year. Competition is intensifying. Google, Meta, Anthropic, open source. The AI models are commoditizing faster than anyone expected. GPT-4 was revolutionary. GPT-5 was incremental. What happens when the next model is not a leap but a step, and the valuation assumes they win the entire AI race? If they come in second, $850 billion does not hold. Anthropic bear case. The smallest revenue of the 3. Confidential filing means you cannot verify anything, and the safety positioning cuts both ways. If your own CEO says your product might be dangerous, how do you sell that to 100 million retail users? Plus, Anthropic has taken billions from Amazon and Google, which means the biggest AI companies in the world are both investors and competitors. That is a weird position to IPO from. So what do you actually do with all of this? Here's my framework. And I want to be very clear, this is not financial advice. This is how I think about it, for educational purposes. Your situation is different from mine. Do your own homework. Rule 1. Never buy an IPO with money you cannot afford to lose. Every single mega IPO in the last decade dropped significantly in the first year. If that pattern repeats, and history says it probably will, you need to be okay watching your position go red for months. Rule 2. Size the position, do not bet the portfolio. If you want exposure, fine, but 1 to 3% of your total portfolio, max. Not 10, not 20, not, I am going all in because this is generational. That is how Rivian investors lost 80%. Rule 3. Compare before you commit. An S&P 500 index fund returned roughly 12% annually over the last decade. No drama, no FOMO, no oversubscribed allocation, no lockup period. If you put $10,000 in an index fund today and left it alone for 10 years, you would have roughly $31,000. Can SpaceX or OpenAI beat that? Maybe. But history says most IPOs underperform the index in their first year. Rule 4. Watch, do not chase. You do not have to buy on day 1. Let the dust settle. Let the lockup expire. Let the insiders sell their shares. The company is not going anywhere. If it is truly a generational company, it will still be a great investment in 6 months. Here's the thing nobody wants to hear. The real answer is not SpaceX or OpenAI or Anthropic. The real answer is that you need a framework for how you invest, and that framework should not change just because 3 exciting companies are going public at the same time. If your framework says you buy profitable companies at reasonable valuations, then SpaceX at 96 times PS does not fit, period. If your framework says you want hypergrowth and you are okay with risk, then maybe a small position in one of these makes sense. But decide that before the ticker goes live, not while CNBC is counting down the opening bell and your heart rate is 130. The companies are real, the technology is real, the future they represent might actually happen. But the price you pay today determines whether you make money or lose it. And right now, all 3 are priced for perfection in a world that is not perfect. The biggest IPO year in history is happening right now. You can follow the crowd and chase the hype, or you can learn the numbers, build a framework, and make your own call. If you want more breakdowns like this, real numbers, no hype, no nonsense, follow me on X at WealthyBeaver. I will see you there.